Hey, it's Clay, and this will be a video chart on ticker symbol SPY. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you normally see, each one represents 30 minutes. So this here may look like several days worth of time. It's actually just today's price action broken down into 30-minute time slices. I like to this time frame. Does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. And yeah, price all over the place today with the Fed decision to cut rates. And got the pullback as I alluded to. If you've watched the videos over the past basically over the past week that I've done, talked about let me scrunch this up so you can kind of see the general sense. So I talked about this rising wedge, which is a bearish pattern, and how I said that, you know what, it's looking like the markets is going to need a pullback. And then on Friday, I did a video where I said, well, you know what, maybe this rising wedge has failed because, yeah, there is a breakout. And then I kind of threw out the word but I said, but let's see if this is actually a true breakout or not. And, I said on Friday that I very well could be wrong because, nobody is perfect. But I said, I'm still thinking there's going to be a pullback because, just because the price gets above that level for a time being doesn't mean it's a true breakout. And then, immediately got our answer on Monday as the price, pulled back here and showed us that, all right, yeah, that was very well potentially a fake breakout. And then, of course, just gap down. And then today we got the further downwards movement and the pullback. So right there, and none of this is to pat myself on the back, but it is to just show that, yeah, there is value in learning technical analysis and how to use charts. And it's fine if you don't believe me. That's why I love the internet. I mean, everything's documented. You can go back and watch the videos of the past couple I've done on this, and you can see my exact thought process. But again, none of this is to pat myself on the back. Definitely to pat charts on the back, though, because sometimes they get a bad rap. But are they a perfect tool? Absolutely not. But are they a tool that should be in all traders' tool belts? Absolutely. So what I'm going to do is go ahead and get rid of these lines. Sure, they are all relevant, but they played their role for now. And from a presentation standpoint, I don't want to risk causing clutter and confusion. So I want to map out some other areas. And then the other point, again, not to pat myself on the back, but to pat charts on the back. I talked about this green line. I promise I have not moved it. Like I said, go back and watch the videos if you think I've adjusted it. And sure, it wasn't exact, but I mean, can we all agree that the low from today was pretty close to that level that I talked about there at 295? So again, the power of charts, pretty good stuff here. So 295, that definitely remains a level of support going forward. A near-term level, though, that the price ultimately was able to get back up above is right down here at the 297 mark. I mean, you can see that there's a good track record there of acting as support. And sure, the price did temporarily break down below it, but because the price was able to close back above it, that would still be that area of support going forward. So again, going further, into Thursday, and then really the remainder of the week, levels of support, again, 297 and then 295. So as far as levels of resistance, so at this point, in my mind, it's all about the 299.75. Let's just call it 300 to bring it up to the round number. And that's based off the fact that that's essentially where this 200 period moving average is right there. So 300 key level of resistance going forward if there is going to be any sort of attempted bounce. But as of right now, the bears are starting to flex their muscles. They've got the downtrend in play. So now it's just a question of, can the price, fight its way back upwards enough to break through that downtrend, or is this the start of something bigger? We'll see what happens. But like I said, got the pullback that I was looking for. And now it's just a matter of, is this pullback going to actually turn into something deeper? We'll see what happens. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.